company can be the pride of Wall Street. Its logo everywhere, its leaders celebrated, its stock a staple in portfolios. And then, almost overnight, that company can unravel. Investors left stunned, employees betrayed, the broader market shaken. How does a business built in the open collapse seemingly out of nowhere? What are the signals we all miss until it's too late? To understand how a business falls apart in plain sight, we first have to understand why so many believed in it in the first place. Every major collapse starts with a rise. Think of households talking about a brand as if it's indispensable. Analysts touting its growth, CEOs gracing magazine covers, and quarterly earnings calls that sound like victory laps. There's usually a story, a compelling vision, a new technology, or a business model that seems to rewrite the rules. It's easy to buy in when the numbers keep going up and the narrative feels unstoppable. Consider the way bubbles form. Early success attracts capital. Capital brings scale. Scale brings attention. As more people get involved, investors, employees, even regulators, the legitimacy of the business seems self-evident. The company becomes a fixture, a part of the economic landscape. Its leaders are seen as visionaries. Its customers feel like insiders. There's a sense that this time, the game has changed. But beneath the surface, there's almost always a flaw. It might be a shaky balance sheet, a flawed product, or a culture that rewards risk over caution. Sometimes it's a leadership team that believes its own hype. Other times, it's leverage, too much borrowed money or too much dependence on a single client or market. The flaw is rarely invisible, but it's often ignored, rationalized away as a short-term blip or a necessary gamble for future growth. The hidden flaw can hide in plain sight for years. Auditors sign off on the books. The media focuses on growth, not risk. Even insiders may not fully grasp how exposed the business really is. In some cases, the flaw is part of what made the company succeed in the first place. A willingness to take big bets, to move fast, to break things. But unchecked, these same qualities can become existential threats. Rehook. Eventually, something triggers the collapse. It could be a market downturn, a missed earnings report, or a scandal that suddenly brings everything into question. Sometimes it's just the slow erosion of confidence. A key investor pulls out, a lender tightens terms, or a competitor exposes a weakness. It's just the moment when the flaw can no longer be ignored. Once the trigger is pulled, the unraveling tends to happen fast. Investors rush to sell. Creditors call in loans. Employees start looking for the exits. What felt like a fortress just days ago now looks like a house of cards. The company's power evaporates. Those who once wielded influence find themselves isolated, their decisions scrutinized in headlines and hearings. Sometimes a new group steps in. Activist investors, regulators, or a rival company looking for a bargain. Other times, there's no rescue. Assets are sold off. Lawsuits fly. The narrative shifts from triumph to cautionary tale. In the aftermath, there's a sense of disbelief. How could something so big, so public, fail so completely? The lesson in all of this isn't just about spotting red flags. It's about understanding the nature of confidence in business. Success breeds belief, and belief can blind us to risk. The systems that build trust, audits, media coverage, analyst reports, can also reinforce groupthink. When everyone's winning, few want to ask hard questions. But sustainable businesses are built on more than hype and growth. They're built on transparency, discipline, and a willingness to confront uncomfortable truths. For investors, employees, and leaders alike, the challenge is to look beyond the headlines and the quarterly reports, to ask, what's holding this business together? What could bring it down? And if the answer feels inconvenient, that's probably the place to dig deeper. If you want to see more breakdowns of business power plays and pitfalls, consider subscribing.